Friends, in this video I'm doing for ITHOUGHTWEALTH, I'm going to speak on the topic 2020, the year of stories. The stock market has become a place where novelty is getting disproportionate premium. Why are we seeking novelty? We think that if a stock idea is presented with novelty, more people will follow it and invest in it. So, to draw the attention of investors, we are turning stories into very thrilling, elemental tales of novelty. We are putting novelty into the stories. We are trying to build a narrative and we hope that people will buy into it. One funny thing that I heard was related to the paint industry where I have worked for 3 decades. It said that trucks take paint every day to the store many times. And that is the USP of a paint company. While the paint company has very strong USPs in costing, it has very strong USPs in branding, it has very clear USPs in product positioning. The real way in which the company meets the consumer demand faster was because of the tinting systems that it put in place, where products could be created on the spot. But the story was spun around something else. Today, when you go back to Twitter and see, you will see people fighting with you on these stories. Such is the power of stories that people buy into them because the way they are told. Another very interesting story that we have seen in 2020 is that the manufacturer of an intermediate or a raw material is actually more powerful as a value creator than the manufacturer of a branded finished product. I'm talking about pharmaceuticals. Now this again is a story that is spun. Another very interesting story which I noticed in a company in which I was invested and I also exited after making significant gains was that a solvent, which is an elementary product that goes into the production of pharmaceuticals, which benefited principally from very low raw material prices and high finished product prices, would be an evergreen product in which earnings will keep compounding. Most of these narratives do not pass the test of time. But in the near term, markets love stories. We love to think that we have bought something which we understand intelligently. And we then buy into it not in an intelligent way, but in an emotional way. So to make more people buy into stories, we present them in a way they appear intelligent, only with the intention that the person who receives it emotionally, and then he propagates it so that he is also seen as intelligent, and then this becomes some kind of a movement of stories. There is a momentum to the story itself. The story of specialty chemicals is another very fascinating thing. To my mind, you should buy specialty companies when they don't have a capex, when they have completed the capex. The capacity utilization is low. Over a period of 3 to 4 years, the capacity utilization will go up. And at the peak capacity utilization, the company will be throwing out free cash like never before. And the markets would buy into that idea. So the story forms when capacity creation is complete, and the story ripens and matures when capacity utilization rises. But the way 2020 saw these stories getting spun is, the story starts when the capacity utilization is high. It's hyped as new capacity creation is announced, and it blasts off when the company is going to do capex. Now, these kind of counter-cyclical stories don't usually last. They don't end well because the markets will have to wait much longer than the people who buy into these stories are ready. The storytellers know it very well. But you need a story, right? In the absence of stories, people create stories, curate stories, and invent stories where there are none. And while telling the story, the important elements of a story which an investor must know tend to get omitted. So, what you see as the story is not the story, it's the story that people want you to know, and they want you to see the story in a particular way. That is why I believe that stories are powerful, but they can also be tiring, wearing, and often they can also be destructive. It's not as if these companies are bad companies. I don't think so. But the way the story is told, the way the story is propagated, the way it is bought into, and the way people allocate capital to stories can lead to long time corrections. And at times when the cycle turns, it can also lead to near-term destruction of capital. Not many people who buy into these stories can actually take the rigor, take the difficulty that stories put them in when they are going to see air pockets. So when a story is told, how it is told, and how the story is bought into, who buys into the story, what happens to the people who buy into stories, how stories are turning out in reality, and the final outcome to the money that goes into stories is something we need to think much deeper. We need to apply ourselves with a little bit of critical thinking. We need to question, and we need to question gently, and we need to ask ourselves whether we are the bunnies or we are going to be benefiting from the stories. From my experience, storytelling has always hurt the lay investor. It has hurt the people who have bought into it with superfluous understanding. It has hurt the people who don't know what is omitted in the stories. So, it's very important for you to understand stories in their real form, in the way they should be seen, in the way you see what is not told to you, and then you decide whether you should buy into a story or not buy into a story. The first time I heard a story was 26 years ago. I heard the word story 26 years ago, and it came from an investor who came flying down from Bombay. And the story has become far more sophisticated in these 25-26 years. Now, we should actually be scared of the story. That is my sense of stories. If you like this video, please share it with your friends who are keen investors, active learners, and would like to engage in a healthy debate. Keep watching our channel. Do subscribe and support us. And thank you for being with I Thought Wealth.